will the US dollar index break out above key overhead resistance levels? So when I'm recording this live stream show, it's going to be a full show tonight because I have a bunch of notes and stories I've been accumulating now for give or take a week. And the dollar index on Sunday night, March 10th, is at 97.42. So there's a big debate over what the dollar index is going to do. David Brady, CFA, who I interviewed over the summer, he's a very smart guy, chartered financial analyst. He used to trade Forex for a living, and he was also in the finance departments at large multinational corporations as well, hedging with currencies. He thinks that 98 is as high. The dollar cannot go above 98 on the dollar index or it will crash everything. And I disagree with him, but we'll see if he ends up being right or not. But I think what he's missing is the dollar index is not necessarily rising for fundamental reasons. Number one, the dollar index is made up of mostly the euro, the yen, the British pound, and a couple other currencies, but mostly the euro. So the dollar index itself is reflecting a weak euro. But number two, a lot of professional money managers, especially professional money managers outside of the United States, and a lot of these guys have been managing money for a long time if they're still in the game. And normally they go back to what they know, the lessons they've learned, and their perception is that the dollar is still very liquid. The dollar and US Treasury markets are still very liquid, and on a relative basis, the dollar and US Treasury markets are still safe havens. So not for fundamental reasons necessarily compared to other governments. Obviously the Treasury, the budget deficits are blowing out, and there's a lot of problems here in the U.S. as well. But if you're a professional money manager managing money outside the United States, and you see that other countries are not doing well, there's problems in Europe, there's problems in China, your first instinct for safety stuff is to probably start moving money to dollars and treasuries. That is part of the safe haven thing. Now, I mentioned the problems in the U.S., and there's a goddamn lot of them, an insane amount of them, actually. So we have President Trump, who is literally manipulating the oil market. He's admitted it in tweets that he's put pressure on the Saudis and other members of OPEC to keep the supply levels high or increase the supply. So he's manipulating the oil market. He's also manipulating the stock market now because he's putting out these statements on his Twitter, or he's having Cocaine Larry Kudlow do it almost every day the stock market is open, talking about progress is being made on this U.S. versus China trade deal. Well, can progress really be made every single day for months and still no deal is in sight? Okay, no deal is in sight. And even if there is a deal even if there is a written deal or a verbal deal or something like that, first of all, she doesn't even want to come to the U.S., President Xi or Emperor Xi, because things are not that close. If things were close, he would come to the U.S., to Mar-a-Lago, and Trump would butter him up. But things are not that close. And even if there was an agreement, China's going to cheat. Okay? So we have a situation now where there's open market manipulation by the president, and no one seems to care on Wall Street as long as it means that the correction in stocks is over, which is ridiculous because since December, since really that crash on Christmas Eve, remember with the Steve Mnuchin plunge protection team meeting, we've had about a 20% stock market rally, except for a 2 or 3% correction recently. And the talking heads on mainstream financial media are already starting to panic and complain. You have Mr. highly paid clown show, Jim Cramer. He put out a tweet in the last week worried that there was manipulation down in the price of FANG stocks just because they had a correction. This is ridiculous. That guy's a ridiculous, highly paid, corrupt clown show. It's unbelievable. And there's just so much lies and deception and gaslighting. And let me give you some examples of this, that we have these semiconductor CEOs, these publicly traded company CEOs, and they are blatantly lying on the conference calls. Fred Hickey, one of the best technology investors, is calling them out on his Twitter, saying that they have been making promises saying the end of 2019 will pick up, we'll have better sales, and there's no evidence or proof of this. And despite there being no evidence or proof, these high-frequency trading algorithms and the hopium stock traders and investors bought up these stocks that had dropped like 20-30% in a correction, and they've rallied. And the real world evidence is that, the global economy, the US economy is not doing that well. Okay? On top of this, we have record net selling from insiders of publicly traded companies. For management teams, for board of directors, there has not been this much net insider selling in about a decade. But we're supposed to believe from the mainstream financial media, President Trump, others, that the stock market's supposed to continue up. Now, the stock market may continue higher, but it's not because of any fundamental reality. And in fact, it's becoming more and more divorced from reality, and it just seems to be getting worse and worse. Grant Williams was talking about how things have gotten, he interviewed Jeff Gundlach for Real Vision TV, and they were discussing how it seems things have gotten even more distorted since December. So basically, when you think things cannot get even more Black Mirror or Twilight Zone or Bizarro World, they do. Okay, I will be checking out listener questions and comments later. I know I'm doing this late, but I wanted to get this out there for you guys for the rest of the week. I am working on additional interviews. So David Brady is a very smart guy, but he thinks that 98, to summarize his position, he thinks that the dollar index going above 98 will crash the global economy, will crash asset markets, and there's just, it's an arbitrary number of 98. We don't know. Okay, so to say 98 is the number, we don't know. I personally, and this is just my opinion, think that if the dollar index runs above like 102, and then it could just take off, and that's when it's going to really start to do the damage. So to say that 98 is the number, I don't agree with him on that. But I do know that there is a lot more credit, a lot more debt in the system, and so the stronger the dollar gets, the more interest rates go higher, that this is very onerous to highly leveraged corporations, emerging market governments with too much debt, in dollar-denominated debt, emerging market corporations, emerging market banks, European banks, etc., etc. Okay, so I wanted to also talk about the ECB, European Central Bank, being trapped. So Danielle DiMartino Booth, she summarized a comment from her friend Peter Bookvar, who has been on my program a number of times in the past. I should probably have him back on in the near future. I really like the way Peter Bookvar thinks. And Bookvar said that, okay, let me just get to the ECB ones real quick. Got to scroll down. Sorry, I'm in the wrong area. Okay. The ECB needs to get out of negative interest rates to save the profitability of its banking system, but will blow up its bond market if they try to get out. So pick their poison. So either they can save the banks or they can blow up their bond market. They may end up screwing up both. So the ECB is also trapped. And on top of this, the Federal Reserve has been already bailing them out with currency swaps for a long time. Welcome to dystopia. Okay, I'm just checking my notes. Give me a second. Yeah, I'm just fed up with all this gaslighting from the mainstream financial media. Jim Cramer, the corporate CEOs now are blatantly lying. It's not just Elon Musk. There's so many of them blatantly lying. And the Fed kept rates at 0 for 7 years, barely hiked after the QE program to encourage leveraging up. Now, Robert Kaplan, I think he's a Federal Reserve member, Board of Governors, says high levels of corporate debt is why he doesn't want to hike anymore. Kaplan acknowledges the trap the Fed is in, but doesn't understand that the Fed is who said it. So this is like bad Federal Reserve logic. And unfortunately now, there's about 6 Federal Reserve Board of Governors, including Fed Chairman Jerome Powell, who just in the last 2 months, give or take, have already said that they want to end the QT program, and they're already talking about the next QE program. So it is really amazing how quickly things have shifted. Very, very quick, actually. So in 2 months, we have gone from 3 more hikes, and this is my buddy Michael Leibowitz's tweet. I took a screenshot of it. It's in the Wall Street for Mean Street Facebook group, which, by the way, this is unbelievably weird. Some of my Zero Hedge articles that I posted in the last couple weeks, Facebook has started to remove them. I'm getting notices on this that Facebook says that Zero Hedge is no longer an approved website. So in the Wall Street for Mean Street Facebook group, they are now removing Zero Hedge articles. I can take screenshots as proof. Okay, so let me just repeat the tweet that Michael Leibowitz put out about 4 days ago. In 2 months, we have gone from 3 more hikes and QT being on autopilot, end quote, to ending QT, starting up QE. Well, we haven't started up QE, but they're talking about it. So if you have this many Federal Reserve Board of Governors actually talking about QE, it's not that far off, and negative rates. So not only is a Titanic headed for an iceberg, but the captains are clueless. I don't know if they are clueless, but this goes back to that the central banks, the politicians, the governments, the bureaucrats, the academic Keynesians, they do not want deflation. They're willing to do anything. They're willing to lie, cheat, steal, change the rules, do all kinds of immoral and corrupt programs to not allow deflation. And I got in an argument with someone who's libertarian in emails about this, and she was like, well, how can the real economy, how can people start to earn a living and be fixed and, live within their means and not have too much debt? And I was like, the economy has to heal. And people don't understand this. Like, a bust is actually the cure. Deflation is the cure, okay? So what is not being allowed by the economic and political elites in power, they are so worried about the short term, so brainwashed and corrupt and scared that they will not allow deflation, which is a decrease in money and credit, which causes lower prices. What the economy needs is, because a lot of people are not really getting wage growth, although we have had in the last month, I think a 3.4% increase in the average hourly annual wage, which does mean there is more inflation in the system, which means there will be more stagflation coming. But what the real economy in the U.S. and other economies also really need is lower deflation and lower prices, okay? A clearing out of the system. We need prices across the board to go down 30 to 50%. That is asset prices, that is consumer prices, food, healthcare, all these things. But I can almost guarantee you, maybe except for a temporary amount of asset prices, that they will not allow these other prices to fall. Why? It is very simple. You do not have to have a PhD in economics. You just have to read a lot of Austrian school economics and look at the opinions of the Keynesians and others. And the bottom line, why they will not allow deflation and allow prices to fall that much and clear, a real clearing event, is because governments cannot tax deflation. Okay? It is that simple. Governments cannot tax deflation. Okay? If you are a younger adult and all of a sudden asset prices are on sale or food prices are down 30%, your standard of living is increased. Okay? Healthcare prices have fallen with competition and free markets. That's beneficial to you. You are getting more for less, not less for more, which is what we're getting now with stagflation and taxes. Okay? We need lower prices on everything, including assets across the board. But the governments, the central banks, the central planners are not allowing it. And that is the main reason of this, is because everything is too leveraged. But the other main reason is because governments cannot tax deflation. Okay? They do not want you having lower prices because they cannot tax them. So we are serfs, where whether it's the stealth inflation tax or more taxes being layered on, we are wage slaves and debt serfs, and the governments do not want us to have lower prices. We need lower prices. Especially my generation and younger, those young adults, they really need lower prices. But the baby boomers are benefiting from asset price inflation, at least in the short term. Although it's in nominal value at certain points, higher asset prices will not keep up with the real inflation rate. So I wanted to make sure I got that point out there. So President Trump has recently also talked about his new budget coming out for 2020, and he has talked about a $750 billion, I believe, increase in defense spending, just an insane number. He doesn't seem to care. He wants to take a lot of money away from social programs like Medicare, Medicaid, Social Security, and then change the accounting rules for a slush fund in the Pentagon. So I don't know if it's exactly a $750 billion increase, but it's just a massive military budget increase. And remember what I said on my last live stream show earlier this week about all the waste, fraud, corruption, and abuse at the Pentagon. They don't need more money. They just need to run things efficiently. There was a story from Reason Magazine from Open the Books. Apparently, that's a nonprofit organization, Open the Books. And Open the Books goes through looking for waste, fraud, corruption, and abuse from both political parties and from all the government agencies. And just in a month before 2018 ended, the Pentagon, so their contractors could max out their budgets. Otherwise, Congress would take away the military budget, because if they don't spend the money, they can have the budget taken away. The Pentagon actually spent almost $5 million in a month just on expensive lobster tails and other stuff. The article is in the Wall Street from Main Street Facebook group from Reason Magazine. So take a look if you want to look at that. But there's just countless examples of waste, fraud, corruption, and abuse. One of my listeners who was just harassing me last week or the week before, and he called me a political hack, which is just totally ridiculous. I routinely criticize both political parties, pretty much every government I criticize. I don't trust any government at this point because I don't think any of them are doing a good job. Maybe from an economic standpoint, Russia's actually doing a pretty good job because they're accumulating gold. They don't have an enormous amount of national debt. And it looks like, on top of that, that Putin has actually broken the manipulation in the palladium market. So there were listeners asking about whether they should short the palladium market, and I said I don't think that was a good idea. The palladium market could go higher because there was a short squeeze on physical metal. The palladium ETF is being drained. Well, I think Putin figured out how to break the manipulation in the palladium market. Now, I would watch, though, to see if there is more palladium mines that come online from South Africa and other places, because there is potential supply if the palladium price continues to go higher, that over the next, it probably is going to take 5 to 7 years for new mine supply to come online. But if the price goes high enough, those mines will be economic. Hello, Kirsten. You're talking Zero Hedge articles are being removed. I have the screenshot now. The article that I posted during this week on Thursday, March 7th was Deadbeat Nation, 37 million credit cards were 90 days past due in Q4 2018. So I wanted to talk about that, real world examples of how the real economy, because Trump is claiming how great the economy is, that the economy is not doing well. And we had record amounts of credit card debt in 2018, $870 billion. By the way, that's almost as much, it's around as much money as total margin debt. But that article, which I posted in the Wall Street from Main Street Facebook group, it was removed. I got a notice from Zero Hedge. I can actually read you the notice now. Let me pull it up. Okay, so it says this post goes against our community standards, so no one else can see it. And it asked me if I want to delete it right away. And if I click on the article link, it says Facebook will not allow me to go to the story from Facebook. Okay? So I could take screenshots of it and put it in the Wall Street for Main Street group. I have other friends who are also, not every single Zero Hedge article, but Facebook has decided that they're trying to block more Zero Hedge articles from being posted there. It's the new normal. Okay, so we got 6 Fed governors, including Fed Governor Jerome Powell, talking publicly about ending QT as soon as possible or in the near future, and QE starting again in the near future. I think the shale oil bubble is in serious trouble. There's an interesting interview from Bethany McLean. She has a new book out about it. She is a very good investigative journalist. She uncovered, I think, the Enron corruption a long time ago, and Chris Martinson interviewed her about her new book. And we have WTI crude at 56.33 and Brent crude at 65.94. So we've had a little bit of a rally, but basically, and this is an excellent interview, I recommend listening to the interview, the energy return on energy invested for U.S. shale oil was not good, and it was being papered over by the appetite for pension funds and private equity and mutual funds who are desperate for income to finance junk debt and equity for shale oil companies. So even though the project economics on a lot of these shale oil wells were not good, they still had for basically about 10 years, although there have been, at one point when the oil prices did crash a couple years ago, there was 100 bankruptcies for shale oil companies, but most of them were not the larger companies, they were the smaller ones. And it looks like that the junk bond debt, the equity that was available from publicly traded markets, has been cut off for a lot of these shale oil producers, and they've been lying. These U.S. shale oil producers are in the same boat that a lot of the gold and silver miners were in when they were just reporting cash costs. So we have a situation now where these shale oil producers are claiming that their break-even costs are like a few months ago, 6 months ago, it was like 50 a barrel, then it was 40, then it was 30, but this was very similar to the primary gold and silver miners because their claimed costs did not match their financial statements. And so Chris Martenson and Bethany McLean were discussing this, that even the lowest cost shale oil producer that's no frills, that doesn't blow money like crazy on a brand new headquarters, which is EOG. They're considered the lowest cost, highest quality shale producer. They have even said that they are struggling with oil prices around 50. And remember that shale oil also sells at a discount to WTI. And some of it is trapped. Some of it, the transportation costs are higher if it's in North Dakota and the Bakken. So the transportation costs can be higher too. So we could have, if the oil prices go lower, and it seems President Trump is still talking about forcing oil prices lower. It's even come out in the Trump administration that they're considering, and there's fights over this in the Trump administration, they're considering suing OPEC countries to not who don't want to produce more oil. Okay, so it seems that people, Trump and a few, it's not everyone in his administration because they're telling him it's a bad idea, but Trump and a select amount of people in his administration want to sue certain OPEC countries for reducing their oil production. And by doing that, it could really bust the shale oil. So if there is continued either normal levels of oil production now, or Trump does sue and threatens them and maybe they cave and they increase production, I don't think Trump understands this. I'm sure people in his administration are telling him, look, we're getting phone calls from oil companies in Texas and Oklahoma that we don't want you telling the OPEC countries to increase oil production because our own companies in Texas and Oklahoma are in some trouble. But Trump seems to be wanting to do that. Yes, that is a good point, Rude Dog, that maybe the U.S. is also, because energy return on energy invested is so bad and the economics are so bad now in shale, that the shale companies have never generated free cash flow really in 10 years. Most of them have not. More than 70% of shale production has not generated free cash flow and is not good energy return on energy invested. So yes, I could see for an oil perspective and regime change, the interventionists in Trump and his administration, the neocons, little Marco Rubio is already talking about wanting to go into Venezuela. He's talking about it every day. Excellent point, Nicholas. You always have great points. The Saudis did try to bust shale and it didn't work, but they didn't bust it because the initial production cost was $65 a barrel, would have busted shale, but they were able to lower their costs somewhat. But most importantly, a lot of that stuff got papered over with all the extra junk bond debt and all the extra equity that the shale companies were able to raise almost perpetually for many years. But in that Chris Martenson interview, and I know all my stuff is jumbled now, but it seems, because my mind's working a lot of different ways, I also have notes I have to get back to that. I'm getting off tangent. But anyways, though, that the main point that Chris Martenson and Bethany McLean were saying was that the venture capitalists were playing kind of the game that Silicon Valley plays, where they fund a shitty startup and the shitty startup has just revenue growth, right? And then after the shitty technology startup has enough revenue growth, they dump it on an IPO on the publicly traded markets. And a lot of people, because the US is very pro-technology, the stock will not collapse immediately. And for a long time, this is what the venture capitalists were able to do with US shale oil companies. And it seems that now that the venture capitalists are trapped, and the private equity people are trapped in their investments in shale oil companies, in junk bonds and equity, and there's no more appetite to dump these shale oil, either bonds or equity, onto publicly traded markets, because people are finally looking at the numbers and saying, hey, your costs are not matching your financial statements. If you say your cost is $30 a barrel, then you should have, at these oil prices, you should have over $20 a barrel in free cash flow. And you don't. So it looks like that shale is going to have big problems unless there is an oil rally in the near future, and then the venture capitalists will be able to dump probably some of their stuff back onto the public markets. But if the oil price goes flat for a while or goes lower, shale may have an enormous bust. And that could hurt. So if you're a real estate investor and you're looking for opportunities, that could potentially mean that properties go on sale in the Texas area and Oklahoma area in the next couple years after a bust for rental properties and stuff like that. Although I hear property taxes in Texas are being jacked up like crazy. Okay, we also had this past week, we had China really release, we had China release really bad export data. So they were only supposed to have a decline in about 4 or 5% on exports, and instead it was minus 20%. And we don't even know if that's a real number. It could have been a lot worse. Okay, my sources have said from what they're doing with the manufacturers that basically they're just piling up inventory and they're not calling in the loans. So if they're piling up inventory and there's no demand to export that stuff, then the numbers are in reality are even worse than the data that we got. And on top of that, China also, the imports, Chinese importing raw materials were down 4%. And so I think the numbers are probably worse than reported. We have credit card delinquencies and debt at record high. So what booming economy, President Trump? Okay, the 3.4% year-over-year average hourly wage growth is worrisome to me because that means that there is more inflation going into the supply chain. So for a lot of small businesses, the labor costs are an important key measure. And then we have politicians trying to force the minimum wage higher. We have politicians in Oregon, this is one of the craziest stories I've seen in a long time. We have the governor of Oregon signing a bill into law for statewide rent control. So if you are a rental property owner in Oregon, I would probably, this is not financial advice, but if I was this is just myself, if I own rental properties in Oregon, I would probably think about starting to sell them all right away. Because if they're going to impose statewide rent control and then they're going to increase property taxes, and if you have a mortgage carrying your rental property, you're going to be in trouble. Hello, Nicholas. The tax laws changed on MLPs. So MLPs are not as good as they used to be. I don't think the last time I looked at MLPs, and I used to be an oil and energy analyst covering these companies a couple years ago. That was my day job. And over the last, since President Trump has been in office, there has been fights over their tax status. So until there's more certainty on their tax status, I would not put any serious capital into there. And we've seen, from years ago, Kinder Morgan switched from a MLP to a C corporation, and it didn't really. I remember there were tons of articles saying that it was going to help Kinder Morgan, and it didn't really help them. So just a lot of crazy stuff is going on. There's a lot of lies. And it's just across the board. It's corporate CEOs, it's Elon Musk, it's President Trump pumping stuff. It's the mainstream financial media, which has this extremely biased, long-only view. So anytime they complain if there's a tiny little correction in stocks, if there's a bear market, they say, oh, it's only a correction and the stocks are going to go back up. And this is just the new normal now, and it's freaking weird. It's dystopian for sure. And on this rally, the gold price got hammered quite a bit on the dollar rally. But I still think that gold and silver are smart insurance plays. Now, physical metal is not an investment, okay? Especially if you're an American, because of the way it's taxed. You cannot buy and hold metal and lock in a low tax rate. But physical metal is money, and it is for insurance and wealth preservation only. It's a hedge. So it's not buying physical gold and silver is not an investment. But I think it is money. And gold and silver in a lot of countries are still, especially countries that are not as developed as the US, are still used as money. And now that there's these smartphone apps where you have gold money, you have the Vaulted app from McIlvaney Financial now. The Vaulted app looks pretty good, actually, where you can save in physical metal. And then when you go to a store, it just sells some gold grams into fiat and it pays that way. So you can keep most of your savings in metal. And it's from audited at the Royal Canadian Mint and stuff like that. But we're seeing a lot of also really, really bad warnings coming out of Canada now about the Canadian housing market and the home equity lines of credit. And I just saw a chart a couple hours ago from the Bank of Canada, and it was insane about the growth in real estate loans in Canada since 2008. You can see it in the Wall Street from Main Street Facebook group. It is a parabolic chart, just nuts, since 2008. And because the real estate prices in Canada have been stable and there was a lot of credit available on real estate in Canada, from what I've heard from some of my friends in Canada, there was an enormous amount of home equity loans and second mortgages on those houses. So for those of you who are not familiar, I believe that Australia and Canada have not officially had a massive recession. Australia, it's been over 25 years since they had a official massive recession. And so over the next 5 to 7 years, Australia and Canada will be having probably really big banking problems and really big housing crisis problems. Unless, this is the only thing I think that can save them. Unless and we may never find out about this, it may just magically happen and these problems may be papered over, that the Federal Reserve just opens up the swap lines, the currency swap lines, to the central bank, the Bank of Canada in Canada and the Australian Central Bank, and make sure that those banks do not start taking down the rest of the global economy. Because the US is still on relatively good relations with Canada and Australia. Hello, Douglas. If I was Elon Musk, I would be dumping my current girlfriend and I would be like hollering at AOC. And I would be working on getting some bailout money, like billions of dollars in bailout money from her. I was jokingly saying that to some of my friends, that Elon Musk should dump the Canadian techno DJ because she doesn't have the right connections, and he should hop in AOC's bed and just work on making sure she's happy. So he gets like tens of billions of dollars in bailouts for Tesla. That's about all. That's like, I don't know what other straws he has. He's running out of ways. I watched this CNBC interview from a money manager. This guy's name was Gene Munster, and he said the way that Tesla is going to solve their cash problems is they're basically just going to show off a prototype of a new type of electric car, like the Model Y or the Tesla sports car, the Roadster sports car, the high-end one, or the pickup truck, and then they're just going to raise a bunch of money in deposits for that. But that basically sounds like, if you're just collecting deposits and you're not actually making the cars and you're collecting the cash for deposits and it's going to take you 5 years or more before you ever produce a car, that almost sounds like a Ponzi scheme. Oh, wow, we got a really nasty troll here. I have to... Okay, bye-bye. Look, man, don't come on the live stream here and call me a moron and say that I deserve to be poor, okay? Just messed up troll bullshit. I know more than most hedge fund managers and most Wall Street analysts. And that's why I can have a conversation with a lot of them for 45 minutes or an hour without even notes. Okay, well, I think I covered almost everything here I wanted to cover. So, okay, one more thing. Okay, so we have this. I was at the DC Blockchain Summit here in DC this week, and I've been to, I think, 4 of these now. And I saw the speech that the head of the CFTC, the chairman of it, I think his name is Christopher Giancomo. I think that's his name. And first of all, he said that he owns Bitcoin, and he said that his wife, who's a lawyer for the Securities and Exchange Commission, she owns Bitcoin. So he said, we're a crypto family, and I was like, oh, that's cool. But then during his speech, he started talking about Bitcoin futures contracts, and how even though he said that as soon as the Bitcoin futures contracts launched, that they crashed the Bitcoin price, he called that free market. And I was like, what? So he basically, and then he started talking about how the US has the most free markets and the best capitalism of any country still, and all this other stuff. And I was like, what are you talking about? So it was an interesting conference, but it's still kind of this conference now. There's a lot of different bureaucrats there, and basically it's bureaucrats talking about how to regulate and legislate initial coin offerings, Bitcoin, blockchain technology, all this stuff. And there is some corporations there, but this conference is just tied into a ton of rules and regulations. So there's going to be tons of it. They don't want to kill Bitcoin and blockchain. They probably just want to steal blockchain technology and use it for a cashless society to track and tax every transaction. I mean, there's a lot of these champagne socialist guys in the US, in Europe, that want to copy the China model. There's even people at Google that want it because Google's kissing up to China now. Google's kissing up. They want a big contract from China. So there's a ton of these rich, hypocritical champagne socialists in the developed world in the US and Europe who want to bring what China has done to their own citizens, like with cashless, a version of cashless society and a social credit score. From what I hear in China, a lot of people don't pay with cash. A lot of people pay with smartphones. And so they want to bring a lot of that here to the US. Wow, the same troll guy is using a new handle now. You're gone. Wow, it's the same comments. I mean, dude, try to change your comments up. Okay, so Toby Dawson says Hyperwave and ToneVez says 102 is possible. Are you talking about the dollar index? 102 would be the worry level for me for the dollar index, because if the dollar index breaks 102 overhead resistance, it could just take off, and then that would be the wrecking ball scenario where it would just become too onerous for emerging market banks, emerging market corporations, emerging market governments that have drastically overborrowed in US dollar denominated debt. And even China is starting to have some problems because the Chinese corporations and state-owned enterprises have been borrowing a lot in dollar-denominated debt lately too. Even though it sounds like there was a very interesting Kyle Bass interview on Real Vision TV a week or two ago, and he was basically talking about, even though Bitcoin is technically banned in China, that the CCP elites, whenever they're going to do a devaluation, that they always buy Bitcoin, or they buy rare gemstones or gold or real estate or other things before the devaluation. So even though China's on a crazy credit bubble and the PBOC's like running the printing presses nonstop, the massive amount of money supply and credit growth in the last 10 years, that the people who are the highest levels of the Chinese government are not holding RMB with their own savings. Hey Greg, thank you for the super chat donation. It's appreciated. Peter calls me the economics wizard. I'm not an economics wizard. I'm not some ivory tower academic. I have read a lot of the different economic schools, and I have real world insights combined with a lot of the different economic perspectives. But I'm still an Austrian school economist, even though some people say I'm not traditional Austrian school economist. The MMT people are actually trying to sell people that the MMT will fill the gap between the government spending and the private sector spending, which is funny because if you come here to Northern Virginia, you will see that most of these private sector companies are parasites to the government. Okay, that if they weren't getting crazy amounts of waste from the federal government and the Pentagon, that a lot of these companies in the DC metro area wouldn't even exist. So to say that there's a gap to fill, it's all marketing. It's total BS. Peter says, Jason, you do know that Trump is totally controlled by the swamp, don't you? Yes, Trump is controlled by the swamp now. He's not going to be able to drain the swamp. Remember, I talked about that in the live stream show a few days ago. And Trump is really kissing the military's butt. It's very interesting. It's kind of like the behavior of, the Roman emperors, that they always made sure they always went out of their way to bribe and overpay and indulge the military, because the Roman emperors were most worried about coups and assassinations from the military from within. Nothing. Okay, Peter further adds, nothing is going to happen. The course is set. Hyperinflation and socialism, probably better to accelerate the decline. Well, I think all of these, the problem, Peter, is that all these currencies are all being intentionally devalued with stagflate and lie, and they're all on a very bad path. So it's just, and this is the thing that all the professional money managers and all these economic experts and book authors are all arguing about, is which one will go first. How will the chain of events occur? Will there be more coordinated devaluations? Will there be something along the lines of a new Bretton Woods agreement? Okay, where the Bretton Woods agreement was where all currencies were pegged to the dollar and the dollar was pegged to gold. That was the initial Bretton Woods agreement. And then in 1971, when President Richard Nixon, that was my tongue, by the way. I didn't actually pass gas. President Richard Nixon severed the dollar's ties with gold. We went to a dollar standard with, talking about the petrodollar. But it was more of a dollar standard, where we could just export dollars and not actually have to produce as much. So the U.S. went from a creditor nation producing stuff, and within like 10 years of that, we went to, importing a ton of things with the world reserve currency and a dollar standard. So people who are saying that the U.S. is still a petrodollar. The petrodollar, Louis Camersano, a small gold, I think is more right with this. I think Louis Camersano and small gold, we've talked about this a lot, where the petrodollar doesn't matter as much as it used to. So we're on a dollar standard now, and we'll see what happens in the future. But the elites do not like the system. Most of them do not like the system. A lot of the people in the Western world and Europe and others, they want the U.S. to go down. They want China to win, and they want champagne socialism, and they want to import the China model of running government into other countries, into Europe and the U.S. Just look at the speeches and the comments from all those people at the World Bank, the IMF, the Bank of International Settlements. For the most part, they rarely criticize China, and they routinely criticize the U.S., and they talk about how China's doing a good job. And this is funny because the MMT people 10 years ago were saying that China was the best model for the future, for economic model for the future. Okay, that was a water break. Hello, Peter. I agree with you. Crash and burn is better than the slow, lingering death, but the elites prefer a controlled inflation or devaluation and stagflate and lie with more inflation and taxes layered across the board. Why? Because most people will hardly notice, and when people do start to realize that over the next 10 years their lifestyle is going to be more than cut in half or more, they will blame capitalism, and they will not blame the central bankers or the politicians as much. Toby says this censorship will put huge pressure on Google, YouTube, and Facebook as they are demonetizing 30+% of their ad inventory. So are you talking about people with large Facebook pages? Because, I lost way more than 30% of my Google AdWords revenues. I've lost more than 90% of my Google AdWords revenues in just the last 4 years. And my channel is 3 times the size, and I have a lot more subscribers. So these companies, it seems that they care more about a political agenda than maximizing every last profit, because they've already made tons of money, and now they want a new world order. They want to remake society a certain way. Hello, Kirsten. I don't know if all Zero Hedge is gone, but at least one of my articles was and I just received this notification today because it wasn't blocked yesterday, because I clicked on that article link and I was about to do this same live stream show yesterday. And that notice in the Wall Street for Main Street Facebook group was not there. It was just put in today. So it seems, and I've seen posts from some of my other friends on Facebook, that Facebook just rolled out on Sunday, March 10th, the blocking the blocking Zero Hedge articles. I don't know if they're blocking every Zero Hedge article, but they're trying to. Philosopher Bees says deflation is great for savers. Exactly. And deflation is also great for people who don't have debt. So if you save money and don't have debt, deflation is good. Inflation is better for debtors because it devalues the value of your debt. But inflation is a tax too. Inflation is a stealth tax, and one of the few things I agree with Keynes, and I think Lenin also said this, is that not like 1 in 1 million men can understand and see and understand that exactly what inflation is. Toby says, U.S. dollar being stronger is effectively lowering prices. Yes and no, it depends. It depends because what's the tax policy in your state in the U.S. or municipality, like county or city? And taxes are getting layered up across the board. So some of the imports, and also as we have more and more trade wars, Toby, we could have more tariffs increase. So we have politicians now here in the U.S. in many different cities and states, and also at a federal level, that are talking about wage and price controls, and Trump is talking about more tariffs on other goods. So just because a stronger dollar would mean some cheaper imports, that doesn't mean that there won't be tariffs and other things layered on. And also, just because one input, if you're a manufacturing company or a small business, just because one of your imports is cheaper on a strong dollar does not mean all your other costs are going down. Especially, like I said, when you have politicians trying to force higher minimum wage, politicians talking about rent control, all politicians across the board in the U.S. wanting to increase property taxes, all these things together fits in very neatly with my stagflate and lie scenario, with more stagflation, trillions of dollars in misallocation of capital from China, the U.S., Europe, etc. Pretty much every country is misallocating massive amounts of money, and then more taxes. Hello, AJ. Interesting question. When the populace is up to their eyeballs in debt, how can the economy avoid slowing down? Well, the real economy never really recovered after 2008. When they printed a bunch of money with the QE programs, it benefited certain industries and certain asset prices. So there was, for many people on Main Street and many businesses, there was never a real recovery after 2008. The system crashed and died and was basically a zombie in many aspects. And China did a absolutely massive stimulus during and after 2008 and over the last 10 years. And for some businesses that are exporting to China, that really, like commodity businesses for a while, and consumer, the amount of consumer goods, like really high-end retail stuff going to China exploded for a while, but that seems to be slowing down. I think we're going to have a currency crisis, and most governments can have problems with it. It's just a question of, like I said, most experts admit that there's tremendous global economic problems in different countries, and no one knows the timing of these things. Like, for example, Kyle Bass thinks that the US dollar will be saved for last, and he thinks that China, Europe, Japan, emerging markets will all have problems first, and the US will just be given more rope to hang itself with. And then ultimately that will mean the dollar has the biggest problems, but it could be years from now. Brent Johnson, who I've interviewed, I think he's an extremely bright guy with his dollar milkshake. He thinks very similar. And there's other people that think that the budget deficits that are blowing out in the U.S. and some of the other problems in the U.S. will mean that the U.S. will have problems first. I think I've listed this in probabilities, that Europe has the largest probabilities of problems right now. So European Union, whether it's European Union government debt, European banks, and they have just tremendous social problems there as well, political and social problems. So Europe has enormous problems. It's a disaster. Emerging markets have enormous problems. The corporate bond market in the U.S. has enormous problems. And that was cited by the 6th Federal Reserve Board of Governors on why they want to end QT, because they're worried about the corporate bond market as well, that there's too much leverage in corporate bonds. So behind the scenes, they must be getting warnings that the corporate bond market is probably less than 2 years or 3 years, less than 2 or 3 years away from a lot more General Electric type scenarios. And on top of this, there's the pension fund crisis. Even though the asset prices have rallied a lot in 10 years, these pension funds all over the globe are still massively underfunded. By the estimates are 400 trillion in underfunded pension funds by 2050. So I'm sure there are a lot of people that are aware of this. This is an excellent point, Codist. I like the way gold is holding up against a strong dollar. Yeah, I don't think this is a really big correction or crash in gold. So I think that's an excellent point. This is another great anecdotal story. Codes says, I know a guy who works at a lab in Livermore, California, where they do a bunch of military stuff. They were below budget, so they just wasted a shit ton of money so they could get more next year. Yep, this is extremely common. I was having dinner with my best friend, and I was hearing stories about when his mom worked in all these federal government agencies, how they would throw, like on work trips, they would like cater at lavish restaurants and 5-star hotels, stays at 5-star hotels, and all this thing. So there are some people in the government and some agencies that try to be efficient with their money, but that it's across the industry, across all the government agencies, is just simply not true. Like I said, there is billions of dollars in waste, fraud, corruption, and abuse at every single federal government agency. Also at the state and municipal level, there is that type of stuff too. It's just not to the level of the waste at the federal level, because the federal level is just, it's just so bad. It's just so bad. Oh, and the other thing I wanted to bring up, I forgot to bring this up in the live stream a couple days ago, is that there's tons of Republican and Democrat congressmen and women who have either sexually assaulted or raped staffers or interns, and they've used taxpayer money. And this has been going on. This is Mike Cernovich has talked about this as well, and he even got one of the guys, I think John Conyers, to resign over this. He sent this story and the legal documents to BuzzFeed News and others in the mainstream to confirm this. But this has been going on for decades, where Republican and Democrat congressmen and women have been using taxpayer money to settle rape and sexual harassment lawsuits. Okay, like big sums of money. So either an unpaid intern or someone who's not even making a living. There's tons of people here in the DC metro area that couch surf, or they can't even afford rent and food and stuff on a congressional salary. Like they're a very low level staffer, and so the congressmen and women are hooking up with them even if they're married, and then they settle with them with taxpayer money. So I would like to see that out of the system, legislated away. So no, there's a lot more Democrats that are doing it than Republicans from what I hear, but there are also Republicans doing it as well. I would also like to see that Republican and Democrat congressmen do not trade on inside information that they are getting in committee hearings. Okay, so some of these are straight up like stock tips, and others they're in a very secret hearing, top secret hearing, where they can't even bring their cell phones in, and they're hearing very sensitive information, and 2 hours later they're making a stock trade on it and profiting enormously off of it. We need to get this stuff out of the system. It needs to go away. There's a book by Peter Schweitzer about this stuff. NUCPR, your mom says that stankflation. Do you mean shrinkflation? So we've been having shrinkflation for a while now at the grocery store, and also at some like sit-down casual dining restaurants, where the price may not go up a lot necessarily, but the portion size at some restaurants I've eaten at, just in the last couple of years, the portion size has dropped by 30 or 40%. And the price doesn't change, or it goes up like 10%. And the same thing in the grocery stores. It's called shrinkflation. I've interviewed Pippa Malmgren in the past about it on my channel a couple years ago. She's very busy, so it's tough to book her for interviews. I have tried though. Okay guys, well, we're at 54 minutes, and let me check real quick to see if there's any current events or news stories I missed. But it looks like I covered pretty much everything. So we've had record U.S. credit card debt close 2018 at $870 billion, but President Trump says that the economy is ripping. Well, maybe for some people it is, but this is evidence that a lot of people are struggling financially. I wrote Sandstorm Gold had some surprise news that came out with one of their investments that they made a very long time ago. They did a deal with Yamana Gold, and they have they have a copper stream, the Chapada copper stream that's been online for years, and they had some other silver streams that were online from that deal. This deal was done at the end of 2015, and they just had the Cerro Moro silver stream come online, which is the largest single source of revenue in company history. So, we waited over 3 years for that, and that's good news. But they bought for $12 million in that deal, and most people weren't aware of this. They bought themselves. Remember I talked months ago about an ROFR, a right of first refusal for a gold stream deal? So they paid $12 million at the time, a little over 3 years ago, for a ROFR gold stream option on this massive copper, gold, silver, molybdenum mine in Argentina called Agua Rica. And most people, even though this was the largest resource that Yamana Gold owns, they have two different mine plans and feasibility studies on the mine. Most people thought that the mine, including the management team of Sandstorm Gold, thought that the mine would not be developed for more than 10 years. But it was just released a couple days ago that there was a partnership agreement announced, and Yamana Gold and Goldcorp and Glencore, but Goldcorp's going to be bought out soon by Newmont Mining, it looks like. And so those three large miners are going to be integrating the Agua Rica mine in the next 2 or 3 years with their already massive copper and gold mine that's next door. So the initial mine plan was that they were going to build a separate mill to crush the rock and break it down there into doré bars and infrastructure, that they were going to build separate infrastructure and mill down there. And it looks like now that the announcement has come in the last 2 days that they're going to fully integrate that deposit in with the existing mill and infrastructure of the mine next door. And that is a big win, a big surprise for Sandstorm Gold, because that $12 million now, it looks like that they can just pay the option or sell the option. They could sell it to a larger royalty and streaming company for an enormous profit, many times what they paid of the $12 million. So either they do the deal, they have a lot of options to go on that deal. So this is an extra, no one was expecting this, including the management team at Sandstorm Gold, and it looks like a big, big, pleasant surprise. So the Agua Rica, in addition to all the other deals, I wrote an article, and the reason I'm bringing this up is I wrote a short blog article about this deal and how it's a big win for Sandstorm Gold on Seeking Alpha, and I sent the article to Rick Rule at Sprott, and he said it was a good article. So I'll put the link to the article in the information section of the show after it's over, and you could take a look, and it explains everything in there. I summarized it for you guys in a page. So absolutely no one, I talked to a bunch of mining experts, and no one thought, including the management team at Sandstorm Gold, that Agua Rica would be 2 or 3 years away from coming online, and it looks like Sandstorm is going to have a new source of cash flow now. It's just a big win. So it's always nice when you have a pleasant surprise like that. This company's really firing on all cylinders now. Okay, guys, well, that's it for today's show. Hopefully you liked it. I'm sure there's other topics I was going to bring up, but I probably forgot them now. I kind of went off script for too long. I could go on tangents and stuff, but I will be working on additional interviews. As of right now, I'm supposed to interview Simon Mihailovich. I'll have to ask him for the correct pronunciation sometime later in the week. And then I also, if you're a local, I have my Wall Street for Main Street 4 million views YouTube channel celebration party later this week. Okay, bye for now, guys.